What is going on, everybody? Good afternoon. I'm so glad to have you here. This is Market Talks on Cointelegraph, and I am your host for today. My name is TA Tim from the Crypto Jeb team. But this is a show we go in each and every single week as to what is happening in the markets that you guys need to know about, and we bring on some of the best experts in the field to help answer the best questions. And I'm super honored to be joined today by Mark Yusko. Mark is an investor at the he's a hedge fund manager. He's the founder, chief investment officer, and managing director of Morgan Creek Capital Management, and also the co-founder and partner of Morgan Creek Digital. And we got a short little video we want to play you to tell you more information about him. Well, good afternoon, Mark. How are you doing today?
No, I'm better after seeing that. That was kind of cool. Very well done. I like it.
Yeah, their team behind there creates those videos is phenomenal. I love watching every single one of those. But Mark, I got to do a lot of research on you over the last couple of days. Watch some of your more recent takes and videos, and I have a plethora of questions, and I'm going to try to get through as many as possible to help everybody in chat. But for those of you who are watching, we got 25 in here. I know we're going to get some more in here. Let's go ahead and smash that like button and subscribe for more content. But the first question, Mark, and we have to start right here because we are 1 day removed, a little under 24 hours removed from Jerome Powell's announcement that the interest rate, he went with 75 bips, but he kind of left the future a little bit vague. And I wanted to get your take on what you took away from that meeting. What are your thoughts about the future of Bitcoin and crypto?
Look, lot to unpack in there. So first, look, I think Powell is dovish at heart, and he knows he's going to have to ease aggressively at the end of this year into next year. So he's just been, reloading the gun by raising rates off emergency levels. The thing about the Fed funds rate, no one cares about the Fed funds rate. No one borrows it. Do you borrow at Fed funds? I don't borrow at Fed funds. Nobody borrows at Fed funds. Banks borrow at Fed funds, and they buy treasuries in a riskless transaction that makes them a lot of money. That's who borrows at Fed funds. So keeping that at zero is basically just a way to reliquify the banks after the global financial crisis. So now what we're stuck with is this question of inflation and recession and, we had 2 negative GDP prints, but that's not a recession. Well, it is a recession. We're in a recession. And yes, the NBER never calls a recession until after the fact, usually 8 to 9 months after the fact. But all of that goes to this simple point. Without liquidity, capital market assets are completely mispriced and completely misaligned. And that means more destruction of the dollar, because this nonsense about inflation, it's not inflation, right? Inflation is caused by excess demand or limited supply of a good or service. That is not what happened. What happened is massive money printing, massive devaluation and debauchement of currencies all around the world. And that's why prices seem to be higher. And the reason I'm wildly bullish on Bitcoin and crypto broadly is mostly for the tech, but also for the simple identity. 1 Bitcoin equals 1 Bitcoin. But we don't price in Bitcoin. We price in currencies, dollars, yen, euro. Like most people have no idea. There's never been a bear market in Bitcoin in bolivars or in pesos or in Turkish lira. Never been a bear market. There's only bear market in dollars, yen, euro, et cetera, when the Fed changes their liquidity profile and the price goes down because leveraged speculators have to sell their assets. But here's the interesting thing. Over the last 2 years, Tim, the government created, the Fed, not the government, the Fed, because the Fed's not government. The Fed is funny.
Right.
It's not federal, and there are no reserves. Like, why is it called the Federal Reserve? It's neither one of those. But
Yeah,
And it's
it's
not a
one of those things
government
like
entity.
you park on a highway and you drive on a parkway. Why?
Exactly, exactly. Total
Yeah.
oxymoron. I mean, it is a private cabal owned by the banks to make the banks rich. That's why the Fed exists, and we should get
Mm,
rid of it. But the reality is, they printed half of all the dollars in the history of the Republic over the past 2 years. Okay.
yeah.
So they cut the value in half. So one divided by a half is two. Bitcoin prices
Right.
doubled over the last 2 years, almost precisely. And people are
Right.
like, oh, it's not a good hedge for inflation. It's actually a
Hmm.
perfect store of value, which is what we're talking about. It's actually been way better than
Mm,
gold, and gold prices would be higher, but they're being spoofed by the banks. They're being manipulated. And the real problem we have right now is, and again, this is not what you want to necessarily talk about, but the real problem we have is we're in the then they fight you phase. So from 2009 to 15 was the first they ignore you phase. A bunch of nerds and geeks playing with that magic internet money. Who gives a crap? All right. Then from 2016 to 21 was then they laugh at you phase. Oh, God, look at those nerds and geeks. They're so stupid playing with their magic internet money. Okay. Now, 2022 to 2027 is then they fight you phase. It's like, oh shit, this is real. We're going to fight. They're going to fight with regulation. They're going to fight with threats. They're going to fight with bullying. They're going to fight with the banks and devaluation. And the fighting part is real. But the cool part is we've already won, because we know that this is the only money other than gold, right? Money is an asset that exists in the absence of a liability. The only thing that has been that for 5,000 years has been gold. Now we have Bitcoin, same thing. It's an asset that exists in the absence of a liability, unlike currencies, which are backed by debt, and bank deposits, which are backed by debt. So the reality now is we're moving into this new world where Bitcoin displaces gold. But the problem is the people fighting us, the banks and the financial institutions, allowed a futures-based ETF to be created, not a spot-based ETF, because that would increase demand for Bitcoin. But
mm. Uh-oh. Got a little hiccup. Hopefully it'll come back on here in just a second.
so anyway,
Yep.
lots to talk about there.
Yeah, no, I thought it was interesting. I was watching one of your videos from the other day. We had a little hiccup there. It's for everybody. We're back now. But something I thought you said was really cool, and I want to start exploring this because this is something that I have really begun to wrestle with in my mind about Bitcoin. You talked about all these people wanting to grab their money, put it in a cold wallet, which I do think is wise for some people, especially when we're watching exchanges go down. But you talk about they want to just go kind of bury it in the backyard, and you said, like, that's gold. We don't need to do that again. You kind of started to get into a little bit of a wrestling point of, man, Bitcoin was used, and it's a great store of value, just like gold, but it also could be used for medium exchange. I'd love to get into your thoughts about that. What do you think is stopping us, or how long do you think it could be before Bitcoin actually does begin to be utilized more heavily as a medium of exchange?
Again, such a perfect question. And by the way, no one wants to wrestle with you on any topic. So that is a good point. But so I'm going to agree with you.
Yeah.
The key here is S curves, right? So we have the S curve of adoption of Bitcoin, the digital gold, and we're about 25% of the way through that S curve of adoption, and that means 75% plus of people still have to acknowledge that it is superior to gold. It's got the same properties of gold, but it's more portable and more divisible, and just really great base layer of money, because it is money. Now, the second S curve will be as it takes on its second use case, which is a medium exchange. And that can be achieved in multiple ways. One, and the thing that I was railing about on that other podcast that makes me angry is you have all these maxis out there, and I won't name names, but they know who they are, saying everybody get their money off exchanges and get out of the lenders and put it on cold storage. That's the only true Bitcoin. Like, okay, fine. But here's the problem, guys. If everybody does that, and you take your Bitcoin and you put it on a thumb drive and you bury it in the backyard, it's just gold. And we've had gold and that doesn't fix anything. It doesn't create a new system, a new monetary system. A monetary system is dependent on people depositing their assets, on those assets being used as collateral to be lent, to be ultimately spent. And we can do that through Lightning Network and layer 2s and layer 3s. I mean, most people think, actually, I have one, right? Two things. So one, what is this, right? Everybody says, oh, it's a credit card. No, it's a debt card. How much would you use it if it was called what it is, right? It's a debt card. But most people think of it as money. Like, I don't have any physical currency in my pocket. I have that. And that is my money, but it's not money. It's 3 layers removed from money. It is a database that runs on COBOL. Think about that for a second. It runs on COBOL, okay? A database that tracks my transactions over the course of a month, and then I settle up once a month using a bank, which is not money. The bank is even 1 layer removed from Fedwire, which is 1 layer removed from, oh, there's no gold. Oh, what is debt? Government debt. US Treasuries is the base layer of the monetary system. And everybody says it's full faith and credit. Well, why is it full faith and credit? Well, because you can print more of it. But if you print more of it, that devalues it, and it basically steals the wealth from the masses to the few. Bitcoin fixes that too, because it's a deflationary currency instead of an inflationary currency. So what I am pissed off, and I am pissed off about, is we need to support as a community the lenders, right? Instead of Celsius and Voyager and BlockFi having to beg people to stay, it should have been like It's a Wonderful Life. Literally, the citizens, the depositors, should have been going out trying to find money to recapitalize those systems so that everybody wins. Now, you can argue whether Celsius deserved that because they had a big giant hole in their balance sheet from bad loans and the Cell token. Okay, fine, maybe. Voyager in the middle. But BlockFi, they didn't have massive bad loans. They had a little tiny hole, but they were put in the same position because of a bank run. And bank runs, like 1907, are bad. And they're bad for the ecosystem. And fomenting that on Twitter, which is what the maxis are out there doing, is negative for all of our potential growth. Because if you want the government in your shorts, trying to confiscate your Bitcoin, trying to tax your Bitcoin, trying to shut down the on-ramps and off-ramps, then make it easy for them by forcing the people who are making progress to fail. Just seems pretty simple.
That's a really interesting way to go. So just kind of even stopping right there before I continue down that same road, would you say you're not a fan of cold wallets, or you think there's still a place for cold wallets? What is your opinion on those?
Look, everyone should have running money or FU money or whatever you call it, right?
Yeah.
You should have a portion of your wealth in cold storage that is out of the jurisdiction and the grasp of the authorities. Now, people say, Mark, don't say that. They're going to come after you. Like, bring it, whatever. No, that's the point, right? That's what gold was used for. You had gold bars in a safe. Wealthy people, what do? They have gold or silver or art or collectibles, some store of value that protects them and their wealth from the ravages of inflation. The average person doesn't have that. 49% of people in this country don't own 1 share of stock. They don't have a 401k. They don't have a pension plan. They don't have a Schwab account. They don't have a Robinhood account. They don't have any stock. They don't own their real estate. They rent. They don't own their car. They rent. That's a depreciating asset. You should never own that anyway. They don't own anything. And so they're not protected from inflation. And if they took a small portion of their wealth and put it into something like Bitcoin, that is deflationary, meaning it increases in value as the currency we denominate it in turns into toilet paper. That's why Bitcoin price goes up. It's not that Bitcoin gets better. Bitcoin doesn't get more efficient. It doesn't grow. It gets better because the currency we've priced it in gets worse. And so that's a long answer to say, yes, cold wallets are important. We invest in Ledger and others. And I think, look, to me, the wallet, and whichever wallet becomes the dominant player, and this to me is $64 trillion question that I'm actually working on every day, is if you go back to the internet, Mark Andreessen created this thing called the browser. And it basically made the internet ubiquitous because everybody could now use it. Then in 2007, this came along and it created the mobile net. And now the internet was truly ubiquitous because we carry around a supercomputer with us all the time. But what's amazing is when it came out, Apple stock went down 40% because people were like, oh, I'm never going to pay $1,000 for a phone. I'll buy a flip phone. Well, you're right. You won't pay $1,000. You pay $1,500 and you'll be happy about it because it does so much more than a phone. I mean, people don't even talk on them anymore. So now the next thing is a wallet. And I don't really want it inserted under my skin. I don't really want that. I don't know if it'll sit on this, or maybe it'll be in like a Google Glasses type of thing. I don't really know. Maybe it's a browser extension, but one of those things is going to make crypto, digital assets, ubiquitous, and then we'll use them for transacting value. But we'll always want to have, I think, some portion off, away from the big system, the same way that people use gold bars. But you don't have 100% of your net worth in gold. No one does. Not no one, but almost no one.
Well, the last question, because I want to get into the market here a little bit. So the last question I'm going to ask on this concept with, medium of exchange versus just store value, do you believe that Bitcoin could be the answer to the new currency? Because that's what we're really looking at right now. Is we're watching the US dollar fail. We're watching almost, I'm not going to say almost, I'm going to take that word away. Every fiat currency on the planet is going down the tubes. It used to be kind of slowly. It's very quickly at this point. And there was a report that came out, I think July 14th. It might have been a little earlier than that, but it was within this last month that the Fed in St. Louis actually was doing some studies on the Lightning Network with Bitcoin, saying that it absolutely could be used as a currency. Do you see that happening? Or do you think you were kind of getting there a second ago? Do you think that currency
let's think about crypto, that. Lightning is not a currency.
Okay.
And even in that scenario, Bitcoin isn't the currency, right?
Right.
Think about it. What we're doing there is we're using the Bitcoin blockchain, the network, as a rail. And look, I'm a meaningful investor in this company called Strike with Jack, and we think this is the future. We really believe that the idea that I can take money, fiat, whatever fiat I choose to have, and I can send it anywhere in the world across the Bitcoin blockchain for free to anyone else anywhere in the world, and they get their fiat, they get their currency, is amazing technology. And that is what Lightning brings to the world. Now, could you say, well, I could use Bitcoin instead of fiat, but why? I mean, fiat isn't going away. Governments are not going to give it up. It'll probably be digital forms of fiat. But the idea for me of Bitcoin being the currency, see, remember, currency is backed by debt. It's different than money. Money is backed by itself. It doesn't have an associated liability. So the same way that gold has been a store of value and has been money, everything else in our world is credit. Credit cards or debt cards, debit cards, it's a T system. When you put your money in the bank, it's no longer your money, right? Most people have no idea that's true. It's not your money. It's the bank's money. You have an IOU. It's a promise. And that promise is good most of the time, unless you happen to live in Cyprus in 2012, and then it was only worth 25 cents on the dollar. Or whether you had La Jolla National Savings when it was worth 0 cents on the dollar. But, if you had insurance, as long as you had less than 250,000, if you had more, you lost it all. So our whole system is based on these promises and these liabilities. And Bitcoin, I just don't see it having currency usage as much as I see the network itself facilitating transfer of value in other currencies, right? If I want to
Yeah.
transfer a Bitcoin to you, okay, great. I use the Bitcoin network, or maybe eventually I use the Lightning network, but still I'm transferring that Bitcoin to you. If I want to transfer money to you, I could use Strike and send you fiat, but I use Bitcoin to get there. And I think
Mm.
what we're doing is we're replacing 70-year-old technology, Fedwire and ACH, with the Bitcoin blockchain. And that's a big deal.
That is huge. And Mark, I feel like I could go way longer just talking about the history and the future of Bitcoin and the blockchain, but we do need to move on to the market itself, because this is the question. You know, there's been this term kind of floated for a while now that we've been in a little bit of a crypto winter, a Bitcoin winter, whatever we want to call it.
It's over, Tim.
But again,
winter is over.
yeah, I was going to say, I was watching some of your stuff. You are one of the proponents of it is over. So what I want to do real quickly before we get there, I'm going to share my screen. We're going to look at it, but hopefully you'll be able to see it as well and kind of explore this, because as it stands right now, you're not very far off. You know, after we kind of plunged down in anticipation of the price, you know, actually, let me start right here. You know, this is where the CPI numbers were back here, back on July 13th. We kind of rallied, and then there was a little bit of a sell-off as we waited. But ever since we got the announcement from Jerome Powell, we've rallied, and we just here within the last hour or two, I guess 2 hours, broke through this ascending level of resistance.
Look what's sitting on my desk to talk about. As I mean, I set this up before the interview. So, I mean, we didn't plan this, but we had the exact same chart, exact same time frame. And no, it's beautiful, because this is the reason that 10 days ago, 11 days ago, I declared the end of crypto winter. And 11 days ago, I wasn't certain. Today, I'm certain. Why am I certain?
Wow.
11 days ago, I said, the reason I believe winter is over is if you go back to how the last winter played out in 2018. So, you know, we started in December 2017. We fell from 20,000 down to 10,000, bounced to 14,000, fell to 8,000. And then we spent a whole bunch of time around 8 to 12,000, and we eventually settled in summer around 6,000. So summer of 2018, we were down to 6,000, and people said, it's over, winter's over. And the problem was we were in this descending wedge, right? We'd hit 6, we'd bounce to 9, then we'd hit 6, then we'd bounce to 8, then we'd hit 6, and we'd bounce to 7, then we'd hit 6, and we'd bounce to 5. Descending wedges are some of the worst, most bearish patterns there are. And once you break it, it's an air pocket. I mean, it is quick and brutal. And so on November 14th of 18, we went down from 6,000 to 3,200 in, you know, a couple of days.
Very
and people
quick,
were like,
very quickly.
What the heck was that? I thought winter was over. Well,
that Adrian, if you want to go back to my screen real quick to talk through this.
No, that's okay. But just, we're going to do oh yeah, sure. So yeah, you can look at that. So you see that descending wedge. I mean, that is just an ugly, ugly chart pattern. And once it broke right there in November, I mean, we were down. And then you get that cathartic break right there, stop. You get that cathartic break, then you get a rally, then it comes back down over a little bit more, and then you have a higher low. Like, wait a minute, a higher low, well, that's good. Then you make a series of higher, so that upward channel right there, now go to the screen you were just showing a minute ago, it looks exactly the same. Since June 14th, we have seen a series of higher lows, right? We had the cathartic breakdown, and I tweeted about this the Thursday before Father's Day weekend, and I caught a lot of crap. And I said, look, no one wants to hear this, and it's not a prediction, nor is it a wish. I don't want this to happen. But I said, the longer we stay at 30,000, and we're in this descending wedge, the longer we're at 30,000, right there. So we had that decline, that descending wedge at the second half of there. The longer we stayed around 30,000, the worse the likelihood was that we were going to 15. And we broke through that thing over the long weekend, and you know, the rest is history. We wicked all the way down to 17.5, which is not 15. And I'm like, well, fine. It doesn't have to be exactly the same as 18. But now, since that June 14th, we have made a series of higher lows. And 11 days ago, we hadn't made the
Yep.
third higher low. Now we have.
Mm-hmm.
And
So 1, 2,
now,
3
as
right
of
there.
this morning,
Yeah.
we just made the fourth higher high. And this one's big because on top of the fourth higher high, we now have 2 white soldiers after a big hammer 2 days ago. And if we get another daily white candle tomorrow, it could be off to the races. So all of that is really positive, and it shows accumulation. And the reason there's accumulation is everyone who was levered got delevered, got margin called, forced to sell, whether it was the individuals on Binance and BitMEX, whether it was the lenders like Celsius and Voyager and BlockFi, everybody, Three Arrows Capital, everybody that was overextended got crushed. And I will argue by the banks using the futures to short them to force it, and the attack on Luna and all that other stuff. But it doesn't matter why. What matters is all the leverage got flushed. And so I did Maria's show on Fox a couple of days ago, about a week ago. And she said, shouldn't we be buying tech stocks? Like, tech stock? What are you talking about? Tech? Oh, they're cheap. They're down 20, 30%. I'm like, no. Yes, they're down 20, 30%. But tech stocks, NASDAQ and the S&P are in the 93rd percentile of expensiveness, meaning they've only been more expensive 7% over the last 140 years. Bitcoin, when it was in the 18,000 range, had only been cheaper 3% of the time in 14 years. So you choose. Do you want to be in the 93rd percentile expensive or the third percentile expensive? I'll take the third. And so I'll reissue what I issued on December 6th, 2018, the Morgan Creek Digital Challenge. I'll take anyone who wants the other side. You take the S&P. I'll take Bitcoin. 1 million charity bet. You both fund half of it, and we pay a charity at the end. Anyone who wants to take it. I actually called Warren Buffett on this in 2018. He answered his own phone, which was really cool. And he said, I'd think about it. His people talked him out of it. Had one other guy who thought about it. His son talked him out of it. But I issue the challenge again. Anyone who wants to take that bet, I'll take it. And I'm going to get crickets again because the accumulation that's happening in Bitcoin right now is big. It's only going to get bigger. And look, spring doesn't mean summer, right? We're not in summer. We're not going to go from 20 to 100 tomorrow. That's not the point. We're still 6 to 9 months away from summer. Now, when summer comes, it's going to be kick-ass. But spring means accumulate, buy the dip. Instead of sell the rip, which was winter, you want to buy the dip and accumulate. And that's what's going on right now.
Now, do you think there's any chance that we start approaching maybe at least back down to 20,000? Like, what would you say if winter's over? Does that mean we've absolutely set the bottom? Or does that mean that if we do go any lower or get close there, it's going to be a very quick touchdown and come back up?
Look, I mean, right now, the new higher low is 21 something, 21.2, 21.3. If we were to violate that, then you have to reevaluate the patterns. But there's nothing. I mean, this is one of the stronger chart patterns I've seen in a long time. I mean, we just busted through the 50-day moving average. 20-day moving average is turning up and is probably going to signal a rage and buy here. As long as we keep making higher highs and higher lows, then we're in accumulation phase. I think the bottom has been in, we said it, 17.5, 17.6, whatever that number was, that wick. That was the bottom for this cycle.
Yeah, I gotcha. And I think it's really cool. Go back to my screen here, Adrian, there was the bear camp was kind of rooting on this one. I want to show this one to you. The bear flag that everyone was calling for, if we were to draw it out right here, this is where I had that ascending level of resistance that I'm going to talk about here. Go to the hourly chart. But everyone was saying, all right, we're going down to 13,000. And by the way, I was in this camp of saying, hey, we have to respect this chart pattern. This could send us down to about 13,000. But I did say, if we break, if we bounce down here to support level one more time, setting a higher low and come back up, the flag's getting a little too long. And then I was noticing earlier, hit the wrong thing right there. My bad, guys. If I go down to the hourly chart, what's really cool is as we broke through this ascending level of resistance, this ascending wedge, it's just, I know there's lots of red and blue lines, but this one right here, that's the one that's been ascending ever since these peaks. We not only broke through it again, but we brought in some volume to kind of confirm that. So I'm listening to what you're talking about there, and I'm like, yeah, this is very bullish. And the level I'm looking, I want to hear what your thoughts are. So on, there's a golden pocket. If we were to go back on the daily chart and go back to the last kind of significant peak we had before we had that big dip, pull up our golden pocket, which I got to shorten my screen a little bit, going right here to the bottom. We're sitting right there around that golden pocket. If we can smash through that, I think, in my opinion, I want to hear yours, that 30,000, at least 28.5, if not 30,000, is definitely within the cards here very soon.
100%. I mean, and the thing that I love about Bitcoin is it's still mostly a human market, and humans are actually very predictable, right? We buy what we wish we would have bought. We sell what we're about to need. We repeat the same bad behaviors over and over. We don't learn from our mistakes. We over lever at the top and we under lever at the bottom, and we don't diversify it. So all the things that happen in human driven markets, like the reason I spend much less time in the traditional markets, it's a bitch, right? I mean, machines are way faster, way smarter, way stronger. They got way more assets, backed by gazillionaires, technical term. And it's just hard. In this market, it's very predictable based on human behavior. And trend following actually works. It actually works really well. In fact, we run an ETF called CRYP that is an actively managed strategy that basically goes in or out. So you're either in Bitcoin or you're in cash. And you say, oh, you can't time the market. I'm like, yeah, you actually can. And trend following worked marvelously well for decades in the traditional markets pre-high frequency trading. Now it doesn't work very well. Bitcoin markets, it still works.
Wow, that's good stuff. Mark, I mean, I have probably about 1,000 more questions for you, but I'm going to let the chat ask a couple of them. I'll start with one I just saw here from Kelly Kellum. I love Kelly Kellum very much. A personal friend of mine. But how long does Mark think we will show strong correlation to the growth curve of the internet adoption? Does he think it will break down or Bitcoin separate with more aggressive adoption?
Oh, great question. Look, I think it'll be almost precisely the same. Why? Because they're based on network effect. They're based on Metcalfe's law. And Metcalfe's law is very strong. It's like Moore's law. Every time you think it's not going to hold, it holds. And so I think the adoption of Bitcoin can certainly be influenced by other factors. But again, it's humans, and humans tend to react in similar ways. And I think, you had all the haters of the internet when it started. And so the S curve looked like an S curve. And you had, 10 years for the first 10%, then another 10 years for the next 90%. And I think we're, at 21, 22%, wherever we are today. And I think it's going to be very similar to that internet adoption curve. Did it have to be exactly the same? No, but I think it'll follow the same parabolic path like a Metcalfe's law curve.
Okay. Good answer here. We got, Ted's World said crypto winters usually last until the end of the year. Do you have any thought on that? It's not really a question, more of a statement, but did you have a thought on that?
No, but look, the reality is they last the same amount of time in days, not calendar years. So it's 1,850 days. We passed that in June. Did it have to be exactly 1,850 days? No. But it looks like, no, not 850 days, 850 days. Sorry. 850 days. And so we hit that number and bang. And cycles don't have to be precisely the same, but they do have to be pretty close to the same. Why? Because the 4-year cycle is embedded in Bitcoin. Right? And it's actually it's the second most ingenious thing about Bitcoin. The most ingenious thing is proof of work and why there will never be a 51% attack. And whoever thought of this is like a gigabrain. It's why I don't really believe Satoshi could be one person, because this is just such genius. It's hard for me to believe it could be a single person, but maybe. But the idea that the moment anyone spent the money to do a 51% attack, the value of BTC would go to zero and you'd lost all the money you spent to try to hack 9,000 nodes over a 10-minute period. Probably cost you hundreds of millions of dollars to get a quantum.
Right.
So it will never happen. So it's just genius. It's just beautiful. It's elegant. And the same thing is true with the halving. The halving is a built-in number go up. And the reason that's important is if you want new technology to get adopted, it has to move. And this is a sexist thing, I'm not supposed to say it, but it's like guys, right? We don't see things if it ain't moving. We're hunter-gatherers from our ancestors. Like my wife says, get the ketchup. I open the fridge, no ketchup. I close the door, she comes up, she grabs the ketchup. It ain't moving, I can't see it. Literally, I can't see it. So the reality is, if the price doesn't move, right? If the price of Bitcoin stayed 10 cents, no one would care. But the halving, what it does is it says, well, wait a second. If the number of block rewards going to the miners gets cut in half, but my electricity prices are the same, my rent is the same, I'm out of business unless the price goes up. So the price has to go up. Now you could adjust the difficulty and all that stuff, but essentially the price is going to go up. And by the price going up, it's going to draw in traders. And then it's going to draw in speculators. Unfortunately, then it's going to draw in the degenerate gamblers, the people who use too much leverage. And so what we get is not a normal parabolic curve, okay? What we get is this. We get the big sine wave. We get greed and fear. And so, let's take the last cycle. We went from $1,000 to 20,000. Fair value was 10. So at 1,000, we were way under. At 20, we were way over. So what happened? The degenerate gamblers came in. They made the futures contract available December 18th, 2018. Bang, starts down after that. So the institutions come in and crush the degenerate gamblers on leverage and buy up all their Bitcoin at cheap prices, $6,000, $8,000, $10,000. Genius. Okay. Then it goes way below fair value because people freak out and they sell. And then what happens? Well, then it starts to go back up towards fair value. Then we got to fair value. Fair value today is around 32, 33. Went to 10 to 33, and then we went to 70. And it was like, oh, yay. Like, no, that's greed. That's leverage. That's stupid. And so what happens? The speculators came in. I mean, the institutions came in when the futures thing happened in November. Interesting. Look at the day of the futures adoption ETF and the day of the peak of Bitcoin. Almost exactly the same. And they start shorting the crap out of it to push it down. Now we're below fair value. Fair value, again, 32, 33. And if you've never had Tim Peterson on, have him on and he'll explain where fair value comes. He has the best model for fair value at N Squared Crypto. And so all of this is saying that ultimately fair value wins, but humans are going to push us above and below based on greed and fear. And the halving cycle seeds that every 4 years. And I think it's mad genius.
Wow. Well, there is so much in there. That is, I'm just even wrapping my brain around all of that stuff. Some of it I've heard before, and some of it I'm like, man, that is cooler than I even thought. And, this next question from chat, we're going to stray away from Bitcoin for a second, but I'm going to pull us back here in just a second. But Wander Learn with Francis Tapon said, will ETH pump or dump immediately after the merge? So I'll kind of rephrase that. Do you expect to pump up before the ETH merge, and then do we see a dump afterwards? Or do you think that's going to hold because of its new format?
I've been doing this a long time. I mean, markets. I'm just old, white hair. Buy the rumor, sell the news is usually how this stuff works. Usually when everybody anticipates something, It's already in the price. It's kind of like recession. Why did the market rally the last couple of days? Because people are like, oh, well, the recession is not going to be as bad as we thought, and Powell might ease. Well, but you're missing the whole point. If there's a recession, earnings are going to go down and stocks are going to follow. And by the way, there has never been a 4% up day in a bull market. Not once, never in history, because bull markets are defined as markets that go up most days, but go down sharply on bad news or perceived bad news. Bear markets are markets that are defined as markets that go down most days and go up sharply on good news or perceived good news. So the perceived good news that, oh, maybe he won't raise as much, or maybe he'll even cut, is causing these short covering rallies. So I think we're still in a bear market in equities, and I think we're in a bull market in crypto. So on the specific question on ETH, look, I'm torn on Ethereum. I do believe in a multi protocol future, but I could be convinced that we'll have a single protocol future. And here's what I mean. If you look at the internet, there are 5 protocols that matter. TCP/IP, which we're using right now. Okay, it's a base layer. Then FTP on top of that to move files. HTTP for for websites. SMTP for email, and then www that ties it all together. It's kind of like a toolkit. If you look at now, I can make a case that Bitcoin is the base layer, that Filecoin is like FTP for files, that Ethereum is like the www. It's a toolkit that allows you to build other stuff. And then we've got a debate. Is it Solana? Is it Polkadot? Is it, Cosmos? Is it, what's the other one I'm missing? Avalanche. That's going to be those HTTP, SMTP. I don't really know. Or you could make the case that no, all the other stuff is not viable. The proof of work is what matters, and that you have to have Bitcoin, then a second layer like Lightning, and then tertiary layers and quaternary layers. I'm not there yet, but I could be convinced that that's possible. But at least right now, I still like Ethereum because it's so well adopted. As Paul Romer said, it's not the best technology that wins. It's the technology that gets critical mass first. And Ethereum clearly has a lot of developers on it, a lot of projects, and it does have a revenue model that could be fixed. I like the revenue model of the DEXs like Uni. Uni's having a good day today, better. But anyway, that's a long answer to say I would probably sell the news, but then continue to accumulate until such time as we decree that it's a Bitcoin Lightning stack only.
Makes sense. Well, I got time for one more question. And I was thinking about this. You talked about this earlier, so I'm throwing it back to earlier in this interview. So if you guys just joined, make sure you go back to the beginning and watch it again. So he talked about in the beginning, it's like people ignored Bitcoin. Then there was a phase where people laughed at Bitcoin. And we've just entered into a phase where they're going to start fighting Bitcoin. And the date you kind of gave was 2027. So with all of that fighting goes on, what do you think? Where do you think Bitcoin could get in price by 2027 throughout that entire fight process? And do you think that that's going to be, multiple bull runs in there? Is that just one bull run running up into it? What is your timeline and thinking for the prices all the way up to 2027?
No, it's a great question. And I love price questions multi-years out. I hate questions like, how's it going to be by the end of the year? No earthly idea. I mean, I really don't. I do believe that the price will be higher directionally because we're in spring on the way towards summer. And so I think we're going to rise. That said, it's easier for me to look at, Tim's model at N Squared Crypto and say, 2 years from now, $100,000 looks like fair value based on Metcalfe's law, based on adoption, based on fundamentals. I'm a fundamental guy. I like fundamentals more than, I like technicals for trading, but I like
Right.
investing in fundamentals. And I think the adoption rate and the use case, in number of new use cases, all point to that base level value being, call it 100K. My long-term forecast still stands, right? I believe that we're going toward the monetary value of gold, right? Total value of gold is 10 trillion. Everybody quotes that number, but it's not really right, because half of that is jewelry and artifacts and chalices and stuff that you don't really use for money. About half of
Right.
that is the monetary value of gold. Gold, other than Bitcoin, is the only thing that exists in the world that is both a currency and a commodity, right? You can use gold for industrial use. You can fill your teeth with it, but it also has
Right.
this monetary value as the base layer of all money. And Bitcoin does the same thing, right? You can use it as the technology, like we talked about. You can use it to transfer money across the protocol. That's the industrial use. But then has this monetary value, it's an asset without a liability. So that $5 trillion number, and you say, 21 million Bitcoin, round it down to whatever it is, 18, 19 million because of lost and stolen. And,
Right.
you come up with a $250,000 number. Could that happen in 5 years? Yeah, for sure. For sure. And here's one other quick tidbit that I just learned the other day that I thought was cool. So I think many people know Satoshi Nakamoto, whoever he, she, they are, although I guess he self-identified as a he, so it's probably a he, or I actually think it's a multiple he's, and Hal was probably one of them, and there's probably a couple others. But 4575 is the birthday of Satoshi Nakamoto. 4533, Executive Order 6102, banning gold. 1975, the reversal of that allowed citizens to own gold again. But a less known, and I think it's pretty cool, this 18-year-old girl, friend of mine's daughter, said, 6102, 6 zeros, 21. That's where 21 million comes from. No way. I never really thought about where did 21 million come from. That could be it.
Oh,
Not sure, but it could be.
that is interesting, though. That is super cool. Well, Mark, thank you so much for joining us today. This has been an
So much
absolute
fun.
pleasure. Honor for me to just get to talk with you. And I really, really want to talk to you again very soon. So I'll make sure to keep in contact
No,
with you. But for
anytime.
anyone who's,
I love doing the stuff. It's all during lunch hour,
yeah,
easy to do, and
yeah,
appreciate the opportunity. Next time, rather than my fuchsia shirt for summertime, I will wear my black T-shirt so I can fit in. Although mine says "Embrace Volatility," and in Bitcoin, what most investors do wrong is they fear volatility. Look, if you want to minimize volatility, put all your money in cash and get poor, because inflation will steal your wealth. If you want to get rich, find highly volatile assets. The higher the volatility, the better, but are uncorrelated with each other, and put them in a portfolio. Most people have no idea that Amazon.com stock and Bitcoin have the exact same volatility, 80%. They both have the exact same volatility. Amazon.com has compounded for 26 years at 40%. Do 1.4 to the 26th power. It's a big number. Okay. 80% volatility. Every year that Amazon's existed, it's had a double-digit drawdown. The average is 31%. Including this year, it was down 39%. Okay. 5 times it went down more than 50%, and twice more than 90%. When was the right time to sell Amazon? That would be never. But who bought it at the IPO and held it for 26 years? 5 people: Jeff, mom, dad, ex-wife, Bill Miller. Everyone else feared the volatility, so they never made the money. Same thing with Bitcoin. For 14 years, it's compounded at 107%, actually better than Amazon. 80% volatility, okay? Had lots of drawdowns, double digit every single year. When was the right time to sell? That would be never. So it's not that you want to have all your money there. You want to buy some today. Actually, you want to buy some yesterday and today and tomorrow and next week and next month, and accumulate. Because here's the thing I'll leave you with. Most people focus on the daily price of Bitcoin. Doesn't matter. Doesn't matter. Price is a liar. Price does not equal value. Price is what 2 people agree to exchange a small amount of a good or service. That's all price is. It's a liar. It has nothing to do with value. What matters in Bitcoin and other things too, but mostly Bitcoin, is ownership of the most powerful computing network the world has ever seen. The most fundamentally sound and secure computing network we have ever seen. And that technology is going to be one of the most valuable assets on the planet. And owning a piece of that, which you can't do at TCP/IP, right? TCP/IP, we're using it right now. It'd be awesome if I could own a piece of TCP/IP, but I can't. The only way to get rich on TCP/IP is to own apps that you give away and you sell people's data. Okay, Zuck, is the master. Although today wasn't so good, but today was bad. But
yeah, it was a bad day. Yeah.
Anyway, I said I would leave you with that thought, which is accumulate the network. Don't worry about the price. Do spend time watching the show and thinking about the price and thinking about ways to add value to your investment stash. Because remember, we should all have 3 buckets: a liquidity bucket, okay, liquid assets to fund our lifestyle, okay, 10 to 15%, okay, that's good. Then we should have the get rich bucket. Okay, that's to do all the crazy stuff, right? The friend's condo deal, the brother-in-law's venture deal, all the hot stock tips you get. You're going to lose all of that. So keep it small. Okay. Then the stay rich bucket. And the stay rich bucket, you should invest, a little bit of trading, don't speculate, and don't gamble.
Wow. I couldn't close it any better than that right there. Guys, that is Mark Yusko. Go check him out. His Twitter handle is right there below him. That is all we have for you guys today, but we'll be back next week, and I will see you guys in the next video. Peace.
All right. Thanks, TA.